Remember checkbooks, those little paper things we used to carry around? They were once the backbone of personal finance management. You'd meticulously note every purchase, hoping the numbers would magically align with the bank's version of reality. Each entry was a small act of faith, a hope that you hadn't missed a transaction or made a math error. That, my friends, was a primitive form of bank reconciliation. It was a time-consuming process, often requiring patience and a good eye for detail. You'd sit down with your checkbook and bank statement, cross-referencing each line item, making sure everything matched up. It was like solving a puzzle, but with higher stakes. Thankfully, things have evolved since then. We've got apps for that now. With a few taps on your smartphone, you can see your balance, track your spending, and even get alerts for suspicious activity. It's faster, more efficient, and a lot less stressful. But the basic principle remains, making sure your financial records and your bank's records are on the same page. This practice is crucial for maintaining financial health. It helps you catch errors, avoid overdrafts, and understand your spending habits better. Because let's be honest, nothing kills a good mood faster than an unexpected bank fee. Those little surprises can throw off your entire budget. By regularly reconciling your accounts, you can avoid these unpleasant surprises and stay in control of your finances. Except maybe stepping on a Lego. That's a pain we can all agree is best avoided. Think of bank reconciliation as a financial checkup. Just like you schedule regular visits to your doctor to ensure your health is in top shape, you should also schedule regular checkups for your finances. Just like you wouldn't skip a visit to the doctor when you're feeling off, you shouldn't skip reconciling your bank statements. It's a preventive measure to catch any issues early. You shouldn't neglect this crucial financial task. It might seem tedious, but it's essential for maintaining financial health. Think of it as a way to diagnose and treat any financial discrepancies before they become bigger problems. It's about making sure your money is where it's supposed to be, ensuring that every transaction is accounted for, and that your records match your bank's records, that no sneaky transactions have slipped through the cracks, and that there are no unauthorized charges or errors that could cost you money, and that your bank isn't overcharging you, because let's face it, they probably are. By regularly reconciling your accounts, you can catch these fees and address them promptly. It's about taking control of your finances and facing those numbers head-on, empowering yourself with the knowledge of where your money is going and how it's being spent. No matter how much you'd rather be binge-watching your favorite show, taking the time to reconcile your bank statements can save you from financial headaches down the road. Trust me, the sense of accomplishment and the lack of surprise fees is worth it. You'll feel more in control and confident about your financial situation, knowing that everything is in order and there are no hidden surprises waiting for you. So, set a reminder, mark it on your calendar, and make bank reconciliation a regular part of your financial routine. Your future self will thank you for it. It's a small investment of time that pays off in peace of mind and financial stability. After all, a healthy financial life is just as important as a healthy body. First things first, assemble your financial arsenal. You'll need your bank statement, either the paper version or the online one, your trusty checkbook, if you're old school like that, and any other relevant documents like credit card statements or online payment receipts. Think of it as gathering clues for a financial mystery. Except in this case, the mystery is usually just you forgetting to write down that latte purchase. Now comes the fun part. And by fun, I mean slightly tedious but ultimately rewarding. Grab your beverage of choice, find a comfy spot, and start comparing your records with the bank's statement. Look for matching transactions like deposits, withdrawals, and those dreaded bank fees. Think of it as a game of spot the difference, but instead of cute puppies and playful kittens, you've got numbers and dollar signs. It's less adorable, but potentially more lucrative. Section 5. Step 3. The mystery of the missing transactions. Sometimes transactions get lost in the digital shuffle. Maybe you made a deposit that hasn't hit your account yet or wrote a check that's still floating around in the mail. Yes, people still use checks. These are called outstanding transactions. Don't panic. Just make a note of these missing transactions. They'll be reconciled in the next cycle, like long-lost friends reuniting after a financial adventure. Section 6. Step 4. The case of the unexpected deposits. On the flip side, you might find unexpected deposits in your account. Maybe it's a tax refund you forgot about, score, or a generous gift from a long-lost relative, double score. Whatever the source, make sure these surprise additions are accounted for in your records. After all, you wouldn't want to accidentally spend money that's not yours, unless it's a really, really good sale. Section 7. Bank reconciliation, common culprits, and how to outsmart them. Bank reconciliation is a crucial part of managing your finances, ensuring that your records match your bank's records. Bank reconciliation isn't always smooth sailing. It can be a daunting task, especially when discrepancies arise. These discrepancies can cause frustration and confusion, making it seem like an insurmountable challenge. Sometimes you'll encounter common errors like typos, duplicate entries, or misrecorded transactions. These errors can throw off your entire reconciliation process, leading to hours of unnecessary work. And then there are those pesky bank fees that seem to materialize out of thin air. These unexpected charges can be a real headache, adding to the complexity of your reconciliation efforts. But fear not, intrepid reconciler. With a bit of patience and attention to detail, you can outsmart these common culprits. These errors can be easily corrected with a little detective work. Double-check your math, scrutinize those transaction descriptions, and ensure that every entry is accurate. And don't be afraid to contact your bank if something seems fishy. Banks have customer service teams dedicated to helping you resolve these issues. They might be the source of the problem, but they can also help you fix it. Don't hesitate to reach out and ask for clarification or assistance. By taking these steps, you can ensure that your bank reconciliation process is smooth and accurate, giving you peace of mind and control over your finances. Section 8. A real-life bank reconciliation adventure. Don't worry, it's funnier than it sounds. Let's say you're reconciling your account and notice a $50 discrepancy. You meticulously review your records, but the culprit remains elusive. Then it hits you. Remember that vending machine coffee you swore you paid for? Turns out you forgot to swipe your card, and the caffeine withdrawal-induced haze caused a financial fumble. Mystery solved. You adjust your records, the bank reconciliation gods are appeased, and you vow to never underestimate the power of caffeine again. Section 9. So, you want to be a bank reconciliation ninja? Congratulations! You've reached the end of our whirlwind tour of bank reconciliation. You've laughed, you've learned, and you've hopefully realized that this essential financial task isn't as daunting as it seems. Remember, regular bank reconciliation is key. Don't wait until tax season to face your finances. Embrace the power of bank reconciliation and become a master of your own financial destiny. Or at the very least, avoid those pesky overdraft fees.